All right, when I first started in the mortgage industry, I guess I was amazed at how many home buyers were out there who had no idea about, I guess, how fixed and variable loans potentially worked and why to fix or take a variable loan. People fix their loans trying to beat the bank, right? There's no such thing as beating the bank. The bank always wins, right? Not everyone's built the same way. Not everyone else understands their accounts the same way or manages their accounts the same way. So really getting a tailored solution for you is very, very important. Joining with us today, I've got Aileen. Maybe tell us what the difference is between a fixed loan and a variable loan.
Fixed loan is where you lock up your home loan repayments over either 1 year fixed, 2 year fixed, or 3 years fixed, or 4 or 5 years fixed, and that's a fixed out that lock at that rate. So that moving forward, you've got that set repayment over the years. So you've got that comfort and security that even the rates go up or down, you're stuck at that repayments there. Also is with variable rates, the rates moves, this adjusts, then your rates repayments will go up as well too.
Yeah, so I'll probably elaborate on that. With obviously variable rates, they tend to move with the RBA. The RBA increases or decreases the cash rate. So, without getting too technical about it, a variable rate moves, I guess, up or down, right?
Correct.
A fixed rate is something that, guarantees you a repayment over a period of time. In Australia, we typically go up to 5 years maximum. You can get more.
Yes.
It might not look that pretty, so some of the rates, when you start going beyond the 5 year arc, the bank kind of protects itself like for rate for risk, so they often go, if you want a longer fixed rate, we're going to charge you a lot more.
Yes.
Yeah.
Correct. Yes.
Having a variable fixed rate, why would people choose a variable rate?
Why people choose variable rate is because they've got money in the offset account and they want to be paying less interest on that, versus also is if you can redraw the funds out of that home loan as well too, if you put extra funds repayments in there. Plus the variable rate is you can put in extra repayments at any time without any penalty as well too.
Yeah, so depending on, I guess, the bank that you choose or the lender or the product, variable rates typically allow you to put additional repayments in, pay off the mortgage as fast as possible, right?
Yes.
There's a lot of this stuff going around where people, pay off your home loan in 5 years, pay it off in 10 years. If you elected a variable rate, you could essentially, pay it off in 5 years if you work out your amortization over 5 years, and you just have to pick, well, that's how much I need to pay every month or every week, week in, week out, and we're going to guarantee it's going to be paid off in 5 years, right?
Yes.
So Aileen, you mentioned an offset account, right?
Yes.
So what is an offset account?
Offset account is linked to your home loan. It works like your regular salary credit account. It allows you deposits, withdrawals. You've got a debit card attached to it as well too. However, the balance in the offset account will offset against the loan. So what that means is if it's interest charged in your home loan, it's calculated based on the remaining balance of your home loan. So if you had a home loan balance of say 500,000 and in your offset account you've got about say $50,000 in there, you'll only be charged on the interest of $450,000 and not the full $500,000 there. The offset account will also give you the ability to be able to pay off your home loan faster by reducing the amount of interest being charged on that loan.
Yeah, so I think Aileen's explained that quite well with an offset, what it does, and how it functions. But a lot of brokers and a lot of, I guess, customers out there, they don't actually understand why they're using the offset, besides the fact that, in theory, you could just put the money into the loan and take it back as redraw.
Yes.
For me, two key, I guess, motives of an offset, okay? Motive one is the fact that offset money is technically your money with your own freedom against it. During COVID, there was, I'm not going to name lenders, but there was a lender, for instance, where customers were putting money into the loan itself as redraw, and they decided, hey, that's our money, and we're scared because of what's happening in the world, that they locked down everyone's redraw. No one had access to their money anymore. If that was in an offset account, they would not have been able to do that by law.
No, they would not.
Yeah. So that's probably my key point one of why you use an offset. Besides obviously the interest savings, if you're using that as an everyday account, it's only marginal if you're only cash flowing a few $1,000s, right? But that's probably key point one. Key point two, very, very important one, right, is if you have an offset, if you bought a property, for instance, and you are at some point planning to turn that property into an investment property, right? You really need an offset, because what that allows you to do is accumulate funds in your offset to reduce the interest payable on that while you're living in it.
Yes, correct.
And at some point, if you want to move out of it and rent it out, you're able to take all of your funds and inject that to your new principal place of residence. That's probably the bigger or stronger point of an offset for me. It's really understanding that tax algorithm
Yes.
Yeah.
Thanks for explaining all of that. Now, can you tell me why would people fix the home loan though?
Yeah, so when people fix home loans, I hear it all the time. So, and this video is about helping cater to our audience to let them understand, fixed versus variable. People fix their loans, they're always trying for some reason, it's like going to a casino, they're trying to beat the bank, right? There's no such thing as beating the bank. The bank always wins, right? Really, you only want to fix for peace of mind, right? So if you know that you've got a steady flow of income, you need to make certain things work for you within budgeting.
Yes.
Fixing is all about certainty, And then can you actually take a complementary loan?
Yes, you can. You can actually have a portion of your loan as variable and the other part is as fixed if you want the comfort and security of that. Yes, yeah.
Yes, that's something that as brokers we talk to our customers. Sometimes people want a part fixed, part variable. With most funders, the offset account doesn't work with a fixed loan, but there are funders out there who does work. So I guess the message of that is, talk to a really good broker who understands their products, their product types, and hopefully it's a strategic broker. So for myself, when I bought my first property, I did, fortunately enough, understand this, and I put an offset account against my first house, which I lived in. I knew that I was never going to live there forever, and I was a good saver. I knew I had the ability to pay off that property very quickly. So what I did do is I put an offset account against my first home. I technically paid off the property by building the funds in the offset account, and then when it came time to upgrade, I always knew I wanted to keep that as an investment. So I took the money out of the offset and used that as a deposit for my new home. What that allowed me to do is then claim the interest expense on the full mortgage. If I had done it the other way and used redraw instead of an offset, I would have paid down the mortgage pretty much down to zero. And then if I redrew that money to buy my new house, that loan was technically paid off. So I would never be able to claim the tax benefits on that loan ever again. So that's the big difference between the offset and redraw, which is very, very critical to your decision making. When you do buy, your first, second, whichever property it is, everyone's circumstances are different, but a good broker or somebody who's gone through it themselves with their own experiences can really give you that knowledge that you need to make educated decisions.
Yeah, true.
So I guess the decision making between, taking a fixed rate or a variable rate, there's no one fixed or fast method, right?
No, there isn't, no.
I think everyone's circumstances are different, and you've really got to talk to someone who understands your circumstances, somebody who can talk about, your cash flow, look at the way your money is flowing, and really understand what works for you. Not everyone's built the same way. Not everyone else understands their accounts the same way or manages their accounts the same way. So really getting a tailored solution for you is very, very important. There's no ratio that's perfect. There's no 20% fixed, 80% variable. It really comes down to your circumstances. What you do need to do is just talk to somebody who's done it themselves, who can give you the right advice to then go, hey, look, this is what's going to suit me, right? And I think
and your financial goals as well too.
100%. Yeah. So I think for Aileen and myself, we've done so many fixed variable, offsets, splitting. Over the years, where we kind of have an idea of what works and what doesn't work.